We've welcomed close to 100 guests on our podcast, ranging from top producing BDOs to the heads of some of the top SBA lenders in the country. But ladies and gentlemen, this is a first. Our guest today ran the SBA. Jeanne Hulit is CEO of Maine Community Bank and was the acting SBA administrator from 2013 to 2014 under the Obama administration. She was gracious enough to come on the pod and covered a wide array of topics like raising the SBA limits, the inner workings of the SBA, her reaction to the sweeping changes of 2023, and of course, Maine. Stick around for a rare interview with the former acting SBA administrator, Jeanne Hulit.
The SBA landscape is changing right before our eyes, and technology is a big driver of that. To think, just a decade ago, I was getting physical loan packages mailed to the office. We've come a long way. But a lot of folks are still getting tripped up on emailing documents back and forth. Files are too big, there's security concerns, and my personal favorite, I already sent you that. Now, I don't have those issues because I use Able. Able is a deal acceleration platform focused on driving efficiency and improving the borrower experience. They plug right into your existing LOS and solves the document chaos between your team and your borrowers. Borrowers get a place where they can collaborate on loan documents at any time, and your team can easily name, organize, and push documents with the click of a button. Welcome to the future. I encourage you to go to able.ai for more information and schedule your demo today.
And by the way, I put on like a real shirt for you. Like,
You're just not in your pajamas or your sweats the way David is while he's working.
yeah, I was wearing a hoodie yesterday, but I was like, had to dress up for you. So thank you so much for doing this. This is going to be awesome. You've done plenty of interviews before in your, career. What's the biggest thing you've done, by the way, like an interview or just anything public speaking wise?
Oh, I don't know. There's just been a lot. I spoke in front of Nagel a lot. I made some remarks and rang the bell in front of NASDAQ. That was really fun. Done a lot of public speaking.
Anything under oath?
No, it was never. Well, I did testify before Congress for a committee, but it wasn't. I don't believe it was under oath. It was just an informational gathering session of a subcommittee in Congress.
Was that the export one?
No, it was on disaster loan assistance.
Gotcha. Okay. Well, this is going to be a little bit different than some of the interviews. This is really niche stuff. The people watching this are the SBA lending community for the most part. And you were former administrator of the SBA. So, by the way, was that a cabinet position when you were there?
Yes. And I was acting administrator. I wasn't, the
So
full-time
modest.
appointed. I was acting administrator following Karen Mills.
That's right. And but does that mean you're in line to be the president?
I think we're way down the line.
Like 17
yeah.
heartbeats away, basically?
Yes, I think it was about 17 heartbeats away.
How do you find yourself in that position where you're running the Small Business Administration? And please start as early as you'd like. I really want to understand your story.
Well, I think I'd start with saying that I'm a commercial lender. That was my background. And here I have a question for you, Ray. When did you get into SBA lending? It will help me reference my background.
Yeah, so I was 21, so this was 2011. I got into it as a salesperson doing 504 loans.
Okay, so by 2011, things were on the upswing. I was a middle market lender for Citizens Bank, and it had a strong commercial lending experience here in Maine, and then the credit crisis came. I'd been involved in politics in Maine, and the Royal Bank of Scotland was the owner of Citizens Bank, and as a middle market lender in the middle of the credit crisis, part of my responsibility was to go out and talk to our clients about the fact that, what are they going to do in the middle of this crisis? Everybody was in trouble. The irony was the Royal Bank of Scotland was in trouble. So here we were going out and telling our clients, clean things up. when our bank was basically failing and had to get taken over by the British taxpayer. So it was a pretty demoralizing experience having to do that as a lender. And at the same time, the Obama administration had come in and were filling the ranks of all the agencies. And I was asked if I'd consider being the regional administrator for New England. It's a politically appointed position. And historically, that position had been filled by people who failed in an election and were being sort of warmed over until the next election. They didn't necessarily have a background in banking. The Obama administration took a different approach. They wanted to get people who knew how to talk to banks in because we needed to get the banks using the program. So I started as a regional administrator, really getting out and networking with the banks in New England to talk about using the program to help small businesses get through the credit crisis. Then was asked to go to D.C. to run the Office of Capital Access, which oversees the loan programs. And it was a sort of a temporary thing. The gentleman who was running the Office of Capital Access left unexpectedly, and the administrator asked if I could go down on an assignment, a temporary assignment. My family's from D.C., so I went down thinking it'd be a 1 or 2 month stint while they recruited, somebody to run the department, and ended up staying for 2 years. It was, I felt like it was really leaning into my strengths. The department needed a lot of work. And we were going into the 2012 election. I went down and I would have gone down in 2011. And so we're going into the 2012 election. And I said, listen, you're not going to find a political appointee to take this job before an election. I'll stay through. And I stayed through the election, was asked to stay on an additional year before going back to New England. And then our administrator resigned to go back to academia. And I was asked to be the acting administrator while they did the search for the permanent. So that's how I ended up running the agency.
Wow, that's so cool. I mean, you have to understand, like I eat, sleep, and breathe SBA. I considered getting the logo tattooed on my calf at one point. That was before they rebranded it. So that would have been kind of interesting. But what's that like? Working in the president's cabinet at that time, basically leading the charge during that specific time, right? Because that was what year?
I became acting administrator in 2013.
Yeah. And so you're still kind of crawling your way out of that whole financial crisis and access
but I'd
to
been
capital.
I'd been with the agency. I started in 2009, right after the credit crisis. And we were in a world of hurt. The economy, the small businesses, the agency had really been demoralized and in some ways dismantled under the prior administration. So as a team, we really felt like with the American Recovery Reinvestment Act, we had this huge mission to get capital out to small businesses and get banks using the program the way it should be used, which hadn't been the case for a while. So it felt like we were flying the jet plane through the storm while duct taping the wings on. So it was really a fascinating time. By the time I became acting administrator, things had stabilized a little bit better. We were building momentum at that point. And the banks, community banks in particular, had embraced the program. They had found a way to use the program to help the businesses in their community when the big banks really retrenched and pulled out.
And when you say the program, which program are you referring to?
Largely 7A. 504 program always had its sort of steady Eddie business, but the 7A program prior to 2009, the maximum loan size was $1.5 million, and it was largely utilized for the Express program and by the big banks doing small ticket items. Anything larger was being done 504, and 7A was basically, it was a legacy from when the district offices used to underwrite the loans themselves. So there wasn't a lot of utilization of delegated lending. The SBLCs were the big dominant lenders in 7A and the big banks. And we found that during the credit crisis, the big banks just stopped. And the community banks needed to step in, learn the program. The loan sizes had gone up to $5 million. Really learn the program and learn how to get it into the market to help small businesses get through the credit crisis intact. And so it was a great challenge because SBA had a reputation that wasn't necessarily great, SBA lending, and the bulk of the loans were these, small loans that were credit scored through the big banks. And so getting into real 7A lending the way it's used today was a real pivot.
Wow. I'm like writing notes over here because I have so many follow-up questions. This is fascinating. So when you're acting administrator, how much of your responsibilities or job was the 7A program? Because there's so much under the SBA umbrella. I'm just curious, like how much of your focus was on the 7A program as acting administrator?
Well, as acting administrator, not as much as when I was associate administrator in the Office of Capital Access. That's where the program is really housed. And I like to say that, the Office of Capital Access is the meat and potatoes of the SBA. We do other things. We do, the entrepreneurial development, SCORE, SBDCs, etc. But it is the loan programs and disaster assistance loan programs that is the real bulk of the agency, and that falls under the Office of Capital Access. So as associate administrator, I was very deeply involved in the 7A program. And then when I became acting administrator, and as part of associate administrator, what we were working on was, revising the SOP, getting the program marketed and redesigned and processed, getting the centers working, and anything that needed to be shepherded by the administrator, we were informing her on how to get the message out. So when I became acting administrator, I continued my messaging on the importance of the 7A program and partnering with our lending community. But the bulk of my work with 7A was in the Office of Capital Access.
So you were at SBA when they raised that cap to $5 million, huh?
Yes.
That's interesting. That was a big move from what it was.
Yes.
$2 million at the time.
$1.5 million.
Wow. So what were the discussions around that?
I wasn't at that. I wasn't there for those. Those really came through the legislation of the American Recovery and Reinvestment Act. It was increasing the caps, and it was, at the time, we had 90% guarantees. So I was just coming in as the New England Regional Administrator when those changes were made. Mm-hmm. So I wasn't at the table for those discussions. But, it was recognized that, many small businesses, the SBA defines small business pretty broadly. Large rule of thumb is sort of, 500 employees or less. And as a middle market lender in Maine, I can tell you that the bulk of my middle market companies were 500 employees or less. So they needed, credit facilities up to $5 million quickly to refinance their debt when the big banks were either failing or pulling out. And so getting the loan size increased was important, getting the 90% guarantee in place. That was also the time that they put in the cap line program for working capital lines for businesses that were under borrowing bases.
That's interesting. Guys, the reviews are in. SBA lenders are calling CORPSMART the best due diligence firm in the industry. CORPSMART is a one-stop shop for all your due diligence needs. And in SBA lending, there's a lot. Searches, filings, vehicles, you name it. I remember I brought a deal in one time that involved an airplane. My credit guy said, "How are we going to go about perfecting a lien on an airplane?" I said, "I don't know. Call CORPSMART." They have decades of experience and they're all about service, and I could speak firsthand on that. If you're not already outsourcing your due diligence, one, you're probably wasting a lot of precious hours that you could be using to make more loans, and two, you could make a mistake, especially if you're lending across state lines because every state is different. If you're looking to streamline this year and get more efficient, this is an easy layup. They can even plug into your LOS so that you can order your searches with a click of a button, and then they're going to end up right where you need them to. To discuss your due diligence needs, go to the CORPSMART website at corp-smart.com, and you can let them know I sent you. Well, let me ask you this. Given inflation, these last few years, and I feel like there's still like a gap between SBA and middle market. Do you think we should be considering, raising that $5 million limit again, or?
No, I don't think so. I think that there is that was necessary, and at the time when you were in a credit crunch. The lending market was really frothy right before the credit crisis. You couldn't do it as a community bank or a conventional lender. You couldn't sell an SBA loan to a borrower because you could get conventional lending just as easily. I would say today it's a good balance. I think that anybody who's borrowing more than $5 million should be an established business that knows what they're doing. And typically there's going to be conventional banks, conventional lending products that will meet that need.
What do you think about all the other changes they made last year?
I haven't followed every single one of them. I'm not an SBA lender myself. I run a bank, so I don't spend the time digesting the SOP the way I used to. But I can tell you that I know the intent of the changes were to simplify the program. The reason banks were not embracing the program when the credit crisis happened was it was so burdensome to understand the rules. The SOP is, 3 inches thick. It was written by lawyers that never made a loan in their life. So it bore no resemblance to the way a bank would make a loan. And so from the time I was there to I think what happened in the last version of the SOP is the effort to make the process of using the SBA simplified, but also consistent with bank processes. So you don't have to invest in an entire operation just to run a loan program, that it should be able to bolt on to what your commercial operations already do. So I know that was the intent. Sometimes you get it right, sometimes you don't get it exactly right, but I think the bulk of it was for the best.
Interesting. When I think of a bank getting into SBA, I think of the banks doing, onesies and twosies, trying to help their customer. Maybe you have a commercial lender trying to get through a 7A process, but that's been tough. I think of like dedicated SBA departments, which is a huge investment, or using an LSP. You think they can get it to a point where just any bank might be able to just make a 7A loan and not have to invest in all that infrastructure?
Yes, I'll just use us as an example. When I started at our bank, we were a onesie twosie shop. The district office puts out the top lenders, every month by volume, and we didn't even show up on the list. We're onesie twosies down on the bottom. And today we just literally, I have my award behind me. We just won the award for the top number one SBA lender by dollar volume in the state of Maine in 2023. So we went from onesie Tuesdays to the top lender in a period of, a couple of years. And we did not create a dedicated SBA shop. We did not create new systems. We did not use an LSP. We got a policy. We trained our lenders on don't say no, say how do we get there. We had a NAGL certified expert in commercial operations department who comes from the credit background. So she knows the SOP inside out. She knows how to structure the deal. And then we trained our CLAs, our commercial loan assistants. A dedicated SBA shop has processors, closers, underwriters, BDOs. A community bank has lenders, commercial loan assistants, and our commercial operations department. We got the training in our existing departments on how to use the program effectively and efficiently. We had some bumps and bruises along the way, but we've ended the year as the number one SBA lender, and we do not have a dedicated SBA department.
Well, that's really cool. I mean, that's you might be starting a trend. Who knows? But that's a really impressive and unique kind of situation. So kudos to you on that.
It's an outgrowth of all the work that started back in 2009 and has continued. So all the revisions of the SOP to try and get us more user-friendly, to try and train banks that we're not here to gotcha and pull the guarantee away. And then, and I hate to say it, but the PPP loan program, where it bore no resemblance to 7A lending, it taught community banks how to spell SBA. I mean, they wouldn't do it before, but suddenly they needed this PPP program desperately, and they used it. And as they used it, they started to say, oh, I've talked to the district office, I've gone on the training, I have people who understand these forms. Why should I stop now that the PPP program's over? Let's use the SBA traditionally. So we have several community banks that are in the same position that we are, where since the pandemic have continued their SBA lending and using the program correctly.
Yeah, but are you guys an outlier though? Because I feel like I've seen about 20 shops fold up this past year. The number of SBA lenders that made at least one authorization so far this fiscal year is down, I think, like 8%. And then I saw a chart the other day where essentially the first 5 million at the top of the rankings for 7A is 5 different lenders now, whereas in 2010 it was 35 different lenders. So it seems like the big guys are getting bigger and a lot of the smaller banks are getting out.
A lot of banks that got into SBA lending got into it thinking they're just going to add a guarantee to a conventional real estate loan and then sell it on the secondary market. That's not what the SBA program should be, in my opinion. It should be getting credit elsewhere, structuring a deal that you wouldn't be able to do. And so if your motivation is just to sell it on the secondary market and you're going to do your conventional lending, it's not going to work. And I think a lot of smaller banks, CEOs said, oh yeah, I want that revenue stream, sell on the secondary market. And then when you come to them with a collateral shortfall loan, they're going to be like, oh, we're not going to do that. Why would we do that? Why would we do working capital? Why would we do a business acquisition? That's not in our wheelhouse. Well, if you start taking that stuff out and you just chunky real estate loans, there's a lot of conventional competition for chunky real estate loans. There's a lot of 504 competition for chunky real estate loans. And, it didn't work for a lot of people because they really didn't know, they didn't internalize the mission of the program.
No, that's a really good point. No, I think that's true. You talk about the reputation of SBA. I know in 2011 when I was dialing for dollars, I was met with some resistance, actually a great deal of resistance to the SBA because it takes 6 months and, all this stuff you've heard over and over. When you're having the conversations today with folks outside, but in the banking space, or even with customers, what is that reputation today of the SBA?
It depends on if the lender is delegated. So, when I joined this bank, we did not have delegated lending authority. And there was probably only one community bank in the state of Maine that was using their delegated lending authority. All the other banks had delegated authority for Express, but they weren't using it for regular 7A. So yeah, it took it. If you were going to do a 7A loan and send it into Citrus Heights, it was a terrible experience. I would never do SBA lending if I didn't have delegated authority. And so it was getting. We have a very good district office. We have very good district director who came out of banking, who could really work with the banks to have them understand that they can originate 7A loans under their delegated authority and not, get a gotcha from the SBA and deny their guarantee if something happens. That's the big difference. So borrowers who had experienced working with community lenders that did not have delegated authority would never do an SBA loan again. Explaining to the borrowers you do have delegated authority and why it's different is the big game changer.
Do you think PPP helped though with the reputation or hurt?
It helped. There are so many businesses that were saved because they got a PPP loan, and the banks, us included, created processes internally to handle SBA loans reporting, the 1502 reporting, and all the fees, et cetera, that, in the past was like, oh, how do we do this? We created processes because of PPP that then stayed with us as we used our delegated authority to do, regular 7A lending.
Sort of like another flying the plane while you're taping the wings to it situation.
It was, very much was. Yeah, PPP was a nightmare to implement. But once you got it implemented, you're like, okay, well, how are we going to use that knowledge that we just gained?
Maine is different. I know 3 people in Maine, and they all sit at your table around Thanksgiving. Like how is banking in Maine different than like other parts of the country?
Well, I always say the thing about Maine is we're 1 degree of separation, and we are 1.3 million people in a geography that is bigger than driving from here to New York City. So if you get on an airplane, a direct flight to Portland, Maine, from just about anywhere in the country, you're going to talk to or sit next to somebody who you either have met or know somebody you know. That's the difference about Maine. So being a lender is even a smaller world, because if you've been any type of business development, you have networked with the same group of people over and did different incarnations of your career. And you get credibility. I think one of the things about banking in Maine is there's no place to hide. If you've been an idiot and you've done a bad deal or you put a company in jeopardy, that will stay with you for a long time. So the bankers in Maine try very hard to be a trusted advisor to their clients, which, we all say that we're going to do that. But in Maine, the consequences of not doing that is bigger, because your reputation will follow you to your next Chamber of Commerce dinner or your next client development meeting. So I think that's one of the reasons why people were reluctant to use the SBA program, because they thought that they weren't experienced enough. They didn't have the expertise. They were afraid that, it would be a bad experience for their customer. But when you get good at it, then you become the trusted advisor, the go-to person for the accountant or the lawyer to say, you're not credit worthy from a conventional side right now, but I know this lender who knows how to use the SBA program well. I'm going to refer you to them.
Mm-hmm.
And that means a lot in Maine.
Yeah, a little different down here in Florida.
Yeah.
I think, but I don't even remember. I think there's definitely over 1 million people in my county, Palm Beach. That's crazy. Well, that's great. Let me ask you this question. Since you've worked in private and public, like what's the difference? Like when you're working in public, people talk about the bureaucracy. Like, is that true? Like, is it really harder to kind of affect change when you're on that side versus in the private sector?
Yes. I mean, I used to say in the public sector, it's so hard to get anything done, but what you're working to do is so important and meaningful. Whereas in the private sector, you can work really hard, not do very meaningful things, bang it out of the park. So it just really depends on what your motivation at different stages of your life is. My motivation personally is my passion is economic development. I feel strongly about leveraging resources to improve people's lives. And my takeaway from my career, having been both in state government, federal government, and the private sector and in private sector banking is the best economic development job you could have. You're providing capital, you're understanding multiple different businesses and helping them with the piece that they're not good at. They may be good at making a widget, but they're not good at how to make sure that the finances are in place to have the growth, but also not to take the company down by taking on too much debt. So it's a really great economic development job, and I encourage young people to get into banking.
So yeah, I mean, the small business space is amazing. I love it so much. And it's like the dollars that, we lend, it affects the business owner and then all the employees, and that money gets recycled into their local economies. And it's like a compounding effect. So it's when I ask people what, do you love your job? Everyone says yes. All the people on my podcast in the SBA space say yeah. And then why? And that's a big part of it. Like, you're actually making a difference.
Exactly. And, nothing feels better than, in a community banking environment, you can drive down the street and go, yeah, I finance that company. Yeah, I finance that company. And that's just really a warm feeling. And I know that when you're doing national lending, like my son does, he has so many stories of businesses that he has helped from failing or have given them the opportunity to grow that they wouldn't have gotten if they hadn't had the special expertise of an SBA lender.
Mm-hmm. So, you made a comment earlier about, making sure businesses essentially are using debt responsibly. So I'm going to just skip my question on MCA lenders because those guys are making a lot of, loans to businesses and the repayment terms are really rough. So I think pretty much everyone agrees that those are, risky, and you got to be careful with that. But, I don't want to combine that with my next question, which is like digital banking, because I feel like there's some overlap. I'm seeing some of these kind of working capital lenders kind of team up with banks to get some of this fast working capital out there. But then there's also, there's so many aspects to digital banking. Like, what's your take on this whole digital banking movement?
I'm relatively old school. I believe that anybody that needs an SBA loan needs a conversation. They need somebody who is talking to them, understanding what they need, and structuring their financing appropriately. When a lot of these digital banking platforms enable a small business to get money quickly, it may not be the right amount, it may not be the right structure, and they don't have a partner helping them understand what the consequences are if there's a misstep and a default. So I think in the small dollar space, the credit scoring, et cetera, the digital banking attributes, that make it faster to decision a loan is really helpful because, it costs as much to originate a $150,000 loan as it takes to originate a $3 million loan if there's no real estate involved. So why would I spend that much time on the $150,000 loan? So there's definitely attributes of the digital banking space that makes it easier for the lender to reach a conclusion. But the nameless, faceless, I'm going to do an online application and I'm never talking to a human being, I don't think serves people well. And I think that the amount of fraud that's in the PPP program and the amount of consequences from that, largely driven by those platforms. We did all of our PPP loans and we were able to work with our customers to say, one, you're not eligible, or two, you did that calculation wrong. You can get more money or less money. We had no PPP loans that, didn't, get their forgiveness, et cetera. The digital platforms had so much fraud and had so much, there was no guidance. The digital platforms that partnered with a bank that used the platform, there was still a human being that, talked to the customer. That was a good match.
Are you only able to lend in Maine?
We could lend elsewhere. We choose, our mission is we're a mutual savings bank, and as a mutual savings bank, we're not stock. We don't have shareholders. We reinvest our profits back into the bank and into the community. So our community is what's important to us, and that's Maine.
Oh, cool. Is that will that change after the merger?
No, we're merging with another mutual savings.
Oh.
Mutual savings banks are kind of a unique construct that is more typical in New England than other parts of the country. Our bank is 157 years old. Most of the banks in Maine are mutual savings banks, with a handful of stock banks outside of the national regionals. But most of the other 20 some odd banks in Maine are mutuals.
So what is, I guess a lot of your focus must be on the merger right now, I would take it.
My personal focus is, yeah. Yeah.
Is it like a
And,
merger of equals, or like what's the deal? What's going on with the merger?
it is a merger of equals. It's only the second merger of equals of mutual savings banks in the state of Maine. And the prior merger was the two banks that I brought together to create Maine Community Banks. So it's a unique exercise. And we are going from the two banks I merged before. We were both banks were under 500 million in assets, and we merged, and we've grown to over $1 billion. And we're merging with Gorham Savings Bank, which is $1.6 billion, and we're now $1 billion. So together it'll be $2.6 billion. The merger of equals is that we have shared governance. Our board will be 50-50. We know we're taking our name and our charter, but the headquarters will be in Portland, where their headquarters is. And, their CEO will be the CEO. I'm going to step back as president and then retire in a year. The CFO is going to be our CFO, and the chief risk officer is their chief risk officer. Chief credit officer is our chief credit officer. So it's a balance of shared
Oh, that's
governance.
so cool. So do you sit at like a boardroom table and kind of negotiate that and be like, I'll take this and you take that?
It was a confidential negotiation between me and the CEO of the other bank with an investment advisor over a period of 18 months before it was public. Yeah, it was a lot of discussion. He and I would get on the same page about something, and then we'd both have to go back to our respective boards and say, well, if we do this, they're going to want that, and how do you feel? And by the time we got where we were ready to put it into a legal merger agreement, all the details had been really fleshed out.
Wow. And retiring in a year after that, huh?
Yeah, retiring a year after the close.
Like a real retirement? Because I interviewed someone that retired yesterday. I interviewed them yesterday. They said they retired, and they didn't retire.
Yeah. It's hard for me to envision right now because I'm busy all the time. But as you may know, I'm a new grandmother.
You do have a grandkid.
And the wheels start coming off the bus when you're over 65, and I've got my health to take care of. I got my grandchild to take care of. I want to travel. I want to be more present in the lives of the people that I care about. And running a bank is kind of all consuming. So I'm looking forward to the next chapter.
That's really cool. I'm really happy for you. So, by the way, when you're running a bank, do you get involved in like hiring and firing of like lenders within the bank?
Yeah, because I'm probably a little bit more involved with the commercial side of the house at our bank than some CEOs, because I come from commercial lending. So I sit on the management loan committee. My vote carries a lot of weight. Any deal that gets to the board for a vote has to have my endorsement. So I'm very closely tied to what our commercial business is and the lenders that bring it.
The only reason I ask is because you seem like a good assessor of people, and so I'm curious because hiring is such an important part of our job functions in management, where it's like it's a skill in and of itself, and you get better over time, hopefully. But I'm just curious if you have any tips or any like what are you looking for in a lender when you're like considering hiring or bringing on a new lender in the commercial space?
Well, there's the initial, like, what are your skill sets? Do you have a good credit head? What is your proven credit background? If for a lender, I think that's just a gate, an opening gate. Do you know how to look at a deal and assess credit risk? But in order to be a successful lender in terms of sales and growing a business, what I look for is your ability to listen and then problem solve from what you've heard. I don't want somebody just selling the bank and selling the product and selling the next thing that we want to, like an interest rate swap or an SBA loan. I want them to listen to the borrower to understand what are their needs and then find the solution. I think that's the first thing. And then the second thing is, in order to determine whether somebody's a good fit for a role, I always ask, what part of the job or the jobs you've had gives you energy, and what part of the job takes energy away from you? So there are great people with great credit skills, but talking to people sucks energy out of them. That's not a
Yeah.
good business development officer. You
Right.
know, other people, they derive energy by talking with people. And so just asking those questions helps you kind of get a sense of where your needs are in the hiring process, and whether or not that floats their boat.
That's a really good question. So thank you for sharing that, because that, if somebody asked me that question, I'd be laying it all on. I'm just, I have no filter. So if
Yeah.
someone asks me a question, it's going right to
Yeah.
my mouth. Like, so that would really be revealing. Are you ready for the lightning round?
Sure.
Okay. Just going to ask you some questions, and we just want some quick answers.
Okay.
What does the Oval Office smell like?
You know, I don't think of it as having a smell. If it had a smell, I would say clean.
Wrong. The right answer is America. I'm just kidding. There's no wrong answers here. What is something that people don't know about you that you can share with us?
That I grew up overseas. My father was in the State Department, and I really didn't move back to the United States till I went to college.
Oh, wow. So like all over the place, or one specific place?
Mostly in Asia. My father was a China specialist, so I grew up in different parts of Asia.
Oh, very cool. All right. Last question. What is it like having David Hulit as a son?
It is awesome. David Hulit is the finest young man in the world. Yeah, he's grown into just an amazing human being. So
Agreed. Yes. He's a very wonderful guy and a great lender. And we interviewed him on this podcast. So might be the first time we've done, multiple generations in the same family. So that's very cool.
Yes, I did watch his podcast, and I have to say that I'm just so proud of him to have the passion for the SBA program that I do, to want to solve problems for small businesses. And he brings life experience to some of the challenges that small businesses have getting conventional credit, and his empathy for that, whether it be a checkered past or a failure of some kind. His ability to be empathetic and to understand that that's not going to define who you are the rest of your life is, I think that's the SBA programs for people who need their situation looked at differently.
Absolutely. Yeah, no, David has gotten some deals done that, might not have otherwise got done if he didn't really roll up his sleeves and do a lot of work to get it there. I know a couple stories like that, and it's a great message too about I know you're about to say the 912 stuff, but you're decoding it for people that might not. But that is true too, because you know what? You do the crime, you pay the time, then you're back, right? So that's what it's all about. So that's awesome. Any parting words before we sign off here?
My only parting words is I encourage more lenders to get involved in the program. It's not about selling it on the secondary market. It's about using the program to find solutions for businesses to get them successful. And some of the products that the SBA have don't lend themselves to selling on the secondary market. They are, the working capital lines, etc. But they all come together to make a whole picture for how do you get credit to solve a problem for a business and help them grow. And I encourage lenders who are looking at the program to consider it that way.
Okay, well, we'll leave it there. Although I would like to do an extra hour on the secondary market. We don't have time today, but you just gave me a good idea for an episode.
All right, great.
Pros and cons of the secondary market. So maybe we'll invite you back.
Thank you, Ray.
All right, thank you so much. Talk to you later.
Talk to you too. It's a pleasure to meet you.
All right, that's it for this week. Don't forget to subscribe to the podcast so you never miss an episode of the Art of SBA Lending. And if you have any feedback or suggestions, email me at ray@artofsba.com. Until next time, ta-ta.